Hi, today we are going to present our group assignment. For our group, the type of instrument we have chosen for the portfolio consists of these 5 stocks, which are Facebook Incorporated, Microsoft Corporation, Apple Incorporated, Ford Motor Company, and Tesla Incorporated. In order for us to collect data of these 5 stocks, we obtain quarterly financial statement from Yahoo Finance, and all the data are calculated using formulas as shown in the Excel. Besides that, we also collected historical data from Yahoo Finance for January to March 2020. Then we extract the adjusted closing price for each stock for data calculation. In order for the data to be accurate, we use S&P 500 as our benchmark for assessment for our portfolio investment.
Next, our group used the fundamental analysis and technical analysis to evaluate the performance of the portfolio. We're using the market approach and income approach for fundamental analysis. For market approach, 5 important key ratios as shown have chosen for evaluation, while for income approach, we will be comparing the intrinsic value and the market price of each stock. Regarding technical analysis, we will use Sharpe ratio and Treynor ratio as the measure to evaluate the performance of portfolio. We calculated the stock daily return, average return, and used the variance covariance metric in calculating standard deviation. We got the beta value of our portfolio over the S&P 500. After that, we calculated the Sharpe ratio to help in studying the return of our portfolio investment compared to its risk, and Treynor ratio calculated to measure the risk and return of the portfolio.
From our findings, we know that the average earning per share is 12.98, and for earning per share, it indicates the higher EPS shows higher profitability. While for average price to earning ratio is 301.2, which shows that investors are expecting high growth rates in the future. For average price to book ratio, we have 8.95. As a result, price to book ratio under 3 usually considered a good value. The high price to book value is because of high public trust of the stock for the portfolio in generate return. Average debt to equity ratio is 3.11, which means it is more risky due to the debt is higher than its equity, while average return on equity is 0.66. Normally, ROE levels will be 18% or more, which indicate our portfolio is good as the profit generation without much capital. For the intrinsic value, only Facebook and Tesla are higher than their current market, which means both of them are undervalued. The rest are overvalued because they have lower intrinsic value compared with the market price. Last, Sharpe ratio and Treynor ratio both show negative value, which are negative 0.0549 and negative 0.024. That's all from me. Thank you.
Yeah, based on the previous finding, each stock has different ratio performance. For market approach, as you can see, the highlighted yellow figure are the best stock compared to others. And generally speaking, a high PE ratio indicates that investors expect higher earnings. However, a stock with a high PE ratio is not necessarily a better investment than the one with lower PE ratio, as a high PE ratio can indicate that the stock is being overvalued. And for income approach, as for the suggestions, our group suggests to buy the stock for FB and Tesla, as the price for the stock is relatively cheap now. However, for Microsoft, Apple, and Ford Motors, their intrinsic value are lower than the market price. This indicates that the price for the stock are overvalued in the market. As for the suggestion, our group suggests to sell the stock for Microsoft, Apple, and Ford, as the price for the stock is relatively expensive and possible gain from selling this stock is expected. That's all from me.
Based on the calculation in Excel, negative value from broad ratio indicate that our investment has performed worse as the return is negative. However, we know that the whole market is worse during the particular period of examination due to the outbreak of COVID-19 and some issues impacting the performance of the market as a whole. This can be proved by the calculation where negative average returns from the most successful market index S&P 500 during that period. As for the recommendations, our group suggests that we might switch from investing stocks to risk-free security for the short-term investment. For example, Treasury bills and notes. Although it has low use as shown in the US Department of the Treasury website, but it is risk-free, however, as currently the whole market is not pessimistic in view. The reason being also our objective for investment is to maximize the returns and minimizing the risk from the investment. We do not want to invest our money into something that seems will not reward us in the short term. Thank you.